Video, we'll be going over IRS Notice CP15B. This is a notice that you might receive from the IRS if you're an employer who has not paid employment taxes. And you might be subject to what's known as the trust fund recovery penalty. So let's go ahead and go through the top of this form, and then we'll discuss a little bit about the trust fund recovery penalty and what you can do in responding to this notice. So in the upper right hand corner, you'll see the notice number, tax period. There should be a notice date, a taxpayer ID number, and the contact information. So you should pay a particular attention to the notice date. That is going to be important when it comes to determining your timeline for either paying an outstanding tax or filing an appeal. All of those processes and procedures have a certain amount of time. For example, if the IRS gives you a tax bill, generally you have up to 3 weeks to pay it. After that, then they have to recalculate the interest and any penalties that may apply and then reassess the total tax. So the notice date is pretty important. On the left-hand side, I'm not sure why they've redacted the location of the IRS office in this notice, but down here would be the taxpayer name and address. So I always recommend that you double check your address to make sure it's up to date. If you've recently relocated, you can file a change of address notice with the IRS. So you can either call the IRS and update your record over the phone after you've validated your information, or you can file the official change of address form. So that's IRS Form 8822 for individual taxpayers and IRS Form 8822-B for business owners. And since we're talking about employment taxes, this would be a business owner type situation. So according to this notice, the IRS is charging the trust fund recovery penalty for willfully failing to collect, account for, pay, or otherwise evade employment taxes. So let's talk a little bit about what the trust fund recovery penalty is. And to do that, that would be on the IRS website. So we'll put a link to this page in the show notes, as well as any resources we've created about forms mentioned here. So basically, the Congress passed a law that allows for something known as a trust fund recovery penalty. So basically, employers are responsible for correctly calculating and withholding income tax or employment taxes. Employment taxes being primarily Social Security and Medicare, also known as FICA taxes. So this is technically the government's money. The trust fund recovery penalty is imposed on business owners who don't remit the government's money in a timely manner. So basically, there are two key terms here. So the trust fund recovery can be assessed against any person who is responsible and who willfully fails to collect these taxes. And if you notice, it says responsible and willfully failing. So there are definitions here. So a responsible person is one of these. So an officer of a corporation, a member of a partnership, a director, shareholder, someone in a position of responsibility. It can also be payroll providers. So if you're a company that's hired payroll management, a payroll provider, then that responsibility now falls on them if that's the intention. And then the willfulness is the person should have been aware, not necessarily must have been, should have been aware of the outstanding taxes and either intentionally disregarded or plainly indifferent to the requirements. So basically, that's a subjective terminology, but plainly indifferent. In this case, generally speaking, the IRS takes a hard line against people that didn't know better. So the people that might fall into this trap are solo entrepreneurs or small business owners that finally get their business going off the ground. They hire one or two employees and they're still trying to figure this stuff out. They don't hire the right help. They don't hire an accountant or a bookkeeper to help, manage this stuff. So a lot of people get overwhelmed and fall into this trap. And those are the people that can be hit with the trust fund recovery penalty. So if you get this notice, it is kind of difficult to work your way out of it, but you do have 60 days from the date of the letter to appeal the proposal. So you probably can have a dialogue with the IRS about making payments and setting yourself up to avoid future penalties. But you may need to at least accept that the IRS has discretion on whether or not they're going to let you off the hook this time around. Generally speaking, you're going to at least owe the balance. You're going to owe interest, and then if the IRS decides to abate the penalty, I think they have a decent amount of discretion here. So to avoid additional interest charges, again, in this particular case, you're getting 10 days from the notice date to actually pay before additional interest is calculated. So you can make that payment by check. If you do, you would write your check or money order payable to the United States Treasury. You would write your taxpayer ID number, the tax period when that ended. So in this case, this would be June 30th, 2010, and then trust fund recovery penalty on your payment. So a lot of times it'll be a tax form like your Form 1040 or your 941. In this case, it would be specifically TFRP. So I apologize for all the redactions. This is not my notice. This was the notice that was pulled down from the IRS website. So you can go to the IRS payments page. You can find out about installment and payment agreements, payroll deductions, things of that nature. If you disagree with the penalty, you can request an abatement of that penalty. So you would have to pay the withheld tax for the employee for each quarter, and then you can file a claim for a refund on the abatement to abate the penalty. So you would have to, post a bond with the IRS for 1.5 times the outstanding balance. So if the penalty is not too severe, it sounds like you kind of have to jump through a lot of hoops to, come out, without the penalty. But you can file Form 843. The IRS does have a couple of, plausible reasons to abate a penalty if you can demonstrate reasonable cause. A first time abatement is something that the IRS has wide discretion on. So if this is your first time, you may be able to kind of request that. If you've been subject to tax penalties in the past, then the first time abate does not apply to you. So if you don't respond, the IRS will continue to charge interest until you pay everything in full. And then on page 3, talk about how they calculate your penalty. And then all of this redacted information would be the periods, usually quarters, The interest is compounded daily, so the number of the days in the quarter, the interest rate, all of these they kind of lay out the calculations for your penalty, which is why you only have a certain limited period of time before they have to recalculate the interest charges. So there is a page here that we'll take a look at. This is Understanding Your CP15B Notice. So there's a couple of frequently asked questions about that. So, what happens if you don't respond? You're going to keep accruing interest. Are you charged interest on the money that you owe? Not if you pay the full amount by the due date. You can, follow these steps if you disagree with the notice. It kind of walks you through why you were assessed the penalty. Unfortunately, I don't see any information here about the calculation of the penalty itself. And our notice is heavily redacted, so we can't actually walk through the calculations. So this is it as far as I'm concerned with the CP15B. It's probably not something that will apply to most taxpayers. However, those small business owners, those solo entrepreneurs that start making money, this is the kind of thing that trips a lot of people up. So if you receive this notice, please pay attention to it, respond to it, because tax penalties and tax problems only get worse. Once you get through this penalty situation, then it would be a good idea to hire an accountant or a payroll servicer to help you manage your payroll properly to avoid this mistake in the future. So as I mentioned, we'll put links in the show notes to resources we've created about some of the forms mentioned here. I'll put a link in the show notes to the IRS page that has information on the trust fund recovery penalty. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's another topic that you'd like to see covered in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.